Hello traders and investors, welcome back to the Trend Trader channel. In today's video, I'll be showing you some of the tricks that you can use with technical analysis. The trick is used to be able to buy large position but with a minimal risk. Before we proceed, I would like to ask those that haven't subscribed to consider subscribing. And if you find value in this video, please smash that like button. Another thing that I would like to ask is to spend as much time as possible watching this video. That really does help the YouTube algorithm to spread the video. So this is going to be an informative session. So I will help you to understand technical analysis, but I also need you to help me to grow this channel. So if you haven't subscribed, please consider subscribing, and please try to watch the full video as possible, right? So let's start. This is just one of the setups that we saw recently. So some of the things in technical analysis you shouldn't really worry yourself about. For example, don't worry much about the time frame or the setups of the moving averages. Use whichever time frame that you are comfortable with, and also use the moving averages that you are comfortable with as well. So you shouldn't worry yourself that much about the small things that we are going to be talking about here, but you should just focus on the bigger picture and also focus on the technique. Like I mentioned, this is one way that you can use to buy a large position in a company. Any company at some point will go under a couple of phases. The stock will go up, then the stock will sort of distribute at the top before the stock it comes back crashing. Then it starts to accumulate before it resume its new, or it initiate a new bull market for that stock. So now this technique is going to help you to be able to buy the stock at the beginning stage of the next bull phase. The bull phase could be anything. It could be the bull phase of the entire stock market, or it can just be a bull phase of a specific stock. Remember that the stock market is like a spaza shop. There are a lot of merchandise that are being sold within the spaza shop. Some merchandise sells better than the other. So even in the bear market, there are still some stocks that are performing better than the other stocks. So your focal point as a trader is to focus on the stocks that are selling better and check out the stuff that is not selling. So whenever we look at the chart, we need to see that where the face of the market is at. So in this case, we are using this moving average. We saw that XBI over the long term, it has been falling. If you just zoom out a bit, then you can see that XBI has been trading below this moving average. Then somewhere here, somewhere around the first week of August, it started to trade above this moving average. So when we zoom in, because that's the focal point that I want us to focus on. So when you look at here, the first close above this moving average, that is where you should have bought the stock, because it gives you a low risk entry position. And also if you look at this, the stock is already on an uptrend at this shorter time frame. How do we know that the stock is on an uptrend? If you look at this low here, let me just switch off this volume so that you can easily see. So when you see here, this is the low of the stock. It traded somewhere around $60. It's an XBI ETF. It's a biotech ETF. Then the stock pushed up, finding resistance near the moving average. When it did the pullback was shallow, so it created this second low. When you compare these two lows, the recent low is higher than the previous low. So we said that a bullish trend, we see a series of higher highs and higher lows, meaning that each new low is higher than the previous low, and also the new highs that are created are higher than the previous highs. So based on this, we already know that okay, we are looking at a change in trend situation. Then once we get this close above the moving average, then we get a confirmation that the stock is now it's about to change the trend. So the best place to buy the stock is to first buy on this first close above the moving average. There you can buy enough shares of that particular stock. It doesn't matter what stock that you are trading. Your focal point is on the setup. Don't focus much on the time frame, and also focus on the name of the stock, because this is applicable to anything. It could be stock, it could be commodities, it could be currency pairs, what is known as forex. right? So we mentioned previously that if a stock breaks above resistance level, it can also pull back before continuing with the move. The pullback is not guaranteed because the stock can just break above the resistance level and then continue to push further up without a pullback situation. But if there is a pullback situation and you missed the buy opportunity at the first close above the moving average, then when the stock comes back to retest the previous resistance level, because initially this is a resistance level, in this case before the stock breaks above this level, it is a resistance level. When the stocks come back and then it bounces on this previous resistance level, now the resistance level has turned a support. So what we see now, we see that the stock is supported by this moving average. So if you missed the first buy opportunity here, this is your second entry point at that bounce there. So when you buy here at this bounce, remember that when you first made the buy, you were supposed to set the stop loss just a few depending on the currency. It could be USD, it could be rands, just a few cents or few rands there below the low of that confirmation candle there, especially if you're using the candlesticks. Then the second buy on that bounce, the stop can be the same stop as the previous one, but make sure that the new buy, the second buy, especially if you bought the first position here, make sure that the second position is half of this position, because if you buy the same amount, then you increase your risk in your portfolio. So this one has to be less than this buy there. Then if the stock it goes up, it pulls back a bit, and then if the stock is about to go up, this previous high level here is the next level that can actually act as the new resistance level here. So we expect this stock to act as a resistance level. So if the share price continue to push further up there, then what we expect to see is that the stock can either come to this level, find resistance, and then it comes back in here. So that is a negative scenario. But if the stock manages to push up there to break above this level, remember the first buy that you made here was because the stock broke above the resistance level. So if the stock breaks above the resistance level again, then you have another buy opportunity here, because you want to buy the stock at every time. Whenever the stock breaks above a new high, you want to make that buy. So when you look at this chart now, you can see we have got this first entry point, we've got this second entry point, then we've got this pivot point here, which we expect to act as a resistance level. So if you made the first buy here and then you made the second buy here, once the candle, you see that the stock close above this level, then we can make our third buy. So you see within a short period of time, you would have bought this stock 3 times in a row. But remember, this is the first large position that you buy, the second buy opportunity you buy half of position 1, and then the third buy you buy half of position 2. Now this is where the tricky part it is. Remember, this is a resistance level. We want to buy when the price close above this resistance level. So whatever the low of this candle, then you take a new stop loss. You have a stop loss just below the low of this candle, meaning that these entries here that you have here, remember those entries, they had their stop here. Once you shift your stop up to this point now, all these first position 1 and position 2, they are just above a break even, so you are no longer carrying risk. And because the entry buy number 3 is actually smaller than all these buys, let's say for example it's a 50% position, the second position is about 25%, and then the last position it's about 12.5%. However you calculate this, but remember we just want to pyramid, so every time you go up the position becomes smaller and smaller. So now with this new stop loss, which is above these entry points, you are not having any risk on this position, and then on this new smaller position you are now actually carrying a small risk, because now this could be the beginning of the new bull market for this particular position. Then whenever the stock go up, if there's enough volume to push the stock up, the stock can quickly run up, especially if your stop loss is about minus 10% from entry. As soon as the position is up 20%, you can actually raise your stop to at least a break even or to 5%. Then in that way you are carrying a risk free position, meaning that you're not going to lose money in that position if the stock pulls back. And if the stock goes up there, you can actually cut. Let's say for example you have a minus 10% stop loss, the stock push up by positive 30%, you can sell half of that position and take your stop loss to either plus 10% or plus 15%, and then just let that stock continue to rise. You, in that way, you will have capital to invest in other stocks, but also you won't be carrying any risk in that particular position. So with this XBI ETF, we bought the ETF when it broke above this level. We are going to buy the ETF again on this bounce, and then we're going to have a buy stop order when the ETF close above this position. So this is not just applicable to this ETF. Like I mentioned, you can also find this similar setup to other stocks. In this case, it's another ETF. It's a tech ETF. There we saw that this tech ETF has been on a downtrend, then it closed above this level here. We bought the ETF. Now it's coming back. It bounced. You can actually see this candle. It came below this moving average before pulling up there. So we're going to have our second buy. In this case, we're using the weekly close, so we have a confirmation that the price is above the moving average. Then we're going to set up another buy stop order somewhere around 152 to take advantage when the ETF breaks above this level. We don't know how far the stock is going to go, but we are willing to take that risk that as long as the stock is trading above this level, we can continue to have this position. But this pullback is not always perfect. We have a position on C.F.R. Richmond. We bought C.F.R. Richmond when it closed above this level, so we were expecting to see C.F.R. pulling back somewhere around 187. What happened? C.F.R. didn't pull back to this level, but now we see the stock is trying to push further up. We already have a buy stop order somewhere around 202 rand, so that if the stock trades above this level, then we add into our existing position. So this is just a setup that you have to keep in mind. The setup can be profitable. Remember, we always have a stop order or a stop loss function, because the setup is not always going to work. In case the stock starts to pull lower, then we can reduce risk. So out of 10 trades, if 5 of these trades are profitable and 5 of these trades are not profitable, we are still in a position to make money as long as the stock or the stocks that works give us more profit than the stocks that didn't work. So that's it that I wanted to share with you today. So keep in mind that the ETFs or the stocks that we are planning to buy, we are going to buy that XBI ETF. We're also going to buy that XLK ETF, and also we are going to add on C.F.R. Richmond. One thing that we don't want you guys to do, we don't want you to view this channel as a place where we are giving tips on what stocks to buy. The channel, it's based on information. We just want to share knowledge, not to give tips, because we want you to become a better trader rather than becoming a person who's always looking for tips from other people. So that's it for today. Once again, if you haven't subscribed, please consider subscribing, and if you enjoyed this content, please smash that like button. If there is anything that you would like us to cover in technical analysis or in stocks in general, please leave it in the comment sections. We always attend to those comments. So that's it. I will see you in the next video.